Welcome back, everybody. You got Will and I-Man here from the Block Runner MetaZone, Rovi and MScribe, and today we're going to be talking about the Reckoning.
Another one.
Another Reckoning. Doomer 2.0. It's back.
Yeah, if you're a real-world asset sector believer, you know, today is not the prettiest of days.
Yeah,
right?
It's a reasonable belief to have.
Yeah.
It's reasonable.
Yeah, I think grand takeaway, right? Because we don't typically like to make videos around these types of situations, right? You know, some kind of like event, specifically like a Doomer-esque event happens in the market.
Yeah.
It's kind of like pointless to kind of like, you know, beat a dead horse. It's like everyone's already talking about this thing. Like,
yeah,
maybe we should use this time to like, all right, there's a lot of noise around something collapsed. You know, maybe we should find some other opportunity while nobody's paying attention, right?
Yeah.
That's what we typically like to do. But I feel like there's some good takeaways from we can kind of like pluck out of this disaster, right?
Yeah, and we're not talking about big here because that collapsed as well over the weekend, correct?
Oh, big? You mean like the big coin?
Correct, the big coin.
Did it collapse?
I mean, that's what they're calling it. It's only been around a week or so.
Right. So we never made a video about Bitcoin, so we don't know what we're talking about. It's a coin on Abstract that launched about a week ago, got a ton of hype and attention. And we talked about it, mentioned it on the podcast, but yeah, it did crash from like 20 million roughly to like 3 million, but it's back to 9.
Oh,
right. So I mean, guess what? Token go up and down, guys. You know, this is big news, right?
Big takeaway.
Yeah.
All right. Well, let's talk about MantraDAO. So Mantra is the big reckoning that we're going to be discussing here, and stay tuned for the big takeaway because it's important. But let's take a look here. Insight on-chain RWAs are gaining traction as BlackRock and JP Morgan push tokenization. Analysts predict TVL could hit 50 billion in 2025. A major shift in crypto. So this reminds me of the days when they were talking about the metaverse hitting 1 trillion. We've seen like 25 or 16 trillion or something like that.
Right.
Somewhere in the 2030s timeframe. We were both asking ourselves, like, how are actually we're going to get to the metaverse generating trillions in like volume and revenue and all this shit?
Yeah, but remember we created those assumptions around a Web3 metaverse, right?
True.
They're making these analyses based on like existing metrics from the Web 2 metaverse space.
But even then,
it essentially just means more kids are going to be birthed and they're going to get tablets and they're going to start playing Roblox and spending Robux. It's really it.
Trillions of volume. To me that sounds kind of crazy. That's why we predicted that it was going to be more on the Web3 side, where you own like digital land and you create businesses and you start creating an economy in the digital realm, and that's how you can perceive a multi-trillion-dollar,
a much bigger scope of like economic flow with the Web3 components. I agree.
So why are we talking about the metaverse? Is this real world assets, right? Well, they made the same predictions of the metaverse, multi-trillion. We're making predictions here, 50 billion in TVL. But then you look at this tweet here. It says, I've never seen anything like this before. And here's MantraDAO going down 90% overnight.
Yeah, this happened yesterday, I think, and it's continuing to decline, right?
Yeah.
If we could look at the chart, I think it just keeps going down, right? So, I mean, this is one of the darling projects in the real-world asset sector, right? So, up until yesterday.
Yeah, and so it's like, you know,
what do you do?
Charts, they go up.
Yeah, but they typically don't go down like that.
Not like this.
So the last time we saw this was like...
But I was asking you before we recorded, it's like, okay, if you look at this chart, let's remove the last 24 hours, right? Mm-hmm. Just remove it. And
a little bit more?
A little bit more than 24 hours.
Okay. A little bit more.
Right there.
All right.
It's like we're looking at each other as...
That looks like Bitcoin.
Right.
That looks like something I want to buy, right?
Yeah, this is like...
We're just recoiling for the next leg up.
Yeah, you know, we're talking to each other. It's like we did good. Like we've made a successful project. Mm-hmm. Everyone likes us, right?
Yeah.
And then just, you know, a few hours later, everyone hates us.
Right.
And we did a bad project. Like, how do we just keep doing this every single time?
Well, not just that. Also, what are the vectors here? So I said, like, that looks like a Bitcoin chart, right? Bitcoin does these, like, these explosive movements to the upside that surprises everybody, right? It's like, wow, I didn't know if Bitcoin was actually gonna like get to 100K, and it does, right?
Yeah.
But there's a pretty safe like assumption that it can't pull one of these like dramatic 90% to the downside
True
type of events, because there's something like per its design, per its distribution, per like a lot of different factors, that risk is tremendously mitigated. Right?
Yeah, 100%. So what you're suggesting is that Bitcoin doesn't have VCs. It doesn't have like these pre-mine. There isn't a team with like, 20% of the supply, 30%.
Well, there is Satoshi, but he's
but
dead.
he produces his own tokens through his own mechanism, right?
Yeah.
He was the first one to do it, so it kind of makes sense. But ultimately, like, you can have successful projects with VC backing. Like, that is possible. Now, is the majority of VC backed tokens like, some scheme to like launch a token and then dump on everybody? Is like that happens on average in crypto, but that doesn't mean that the mechanism is bad. Right, because you got to be able to fund projects so that they can actually build something. If you don't do that, then you just have a bunch of memes.
Yeah, but it's a spectrum, right? And it's something that needs to be pretty well understood. And it's part of the risk tolerance, like due diligence, I guess, you have to do individually as like a participant in these markets, is to look into these tokens, these projects, right? Like, wow, this is a sector leader here, Montredow, right?
Yeah.
This is you got these big bank financial institutions analyzing and making projections into the future. Like, this is a no-brainer investment to make, right?
Right.
It's essentially what they're telling everyone with these types of reports. It's like, if you're not positioning yourself now, you're going to regret it, right? And once this thing like is 100x from where it is today.
Yeah, and it's a reasonable proposition. I mean, tokenizing real-world assets, like, it kind of makes sense. Like, when you buy a house, you have to sign this huge stack of documents, and it's not necessary. You don't need to do all that.
Yeah, and it's been something, this industry of crypto has been like chasing for a while now, ever since we've been in it. Since 2017 days. Like, this has been the ultimate golden goose. So you see projects like Montredow. We made other real-world asset videos in the past, like talking about Red Belly, Ondo, finance, and stuff. So there's a real sector here, right, with big actors. So, this seems attractive, right?
Yeah, I mean,
but you got to look into it. Like, how much of the supply does the team control, right? That's really was the vector here. Again, that like something like Bitcoin or other like fairly distributed, mass distributed assets, like a Tensor,
a NAT,
like a NAT token,
like
things like that, right?
Yeah.
You don't have these attack vectors. And that gives like some investor confidence, right?
Yeah. So I'm sure you guys are asking, well, what the hell happened here, right? Did the team rug, or what happened? So this is Mantra. This is bringing the world's financial system ecosystem on chain. But here's one of the founders, JP Mullen, and he explains it with, first off, the team and I greatly appreciate the support that we have received over the past few hours, which I believe is a testament to the strong support Mantra has amongst its investors and community. When I was reading this, I thought they were closing their doors.
Yeah.
Yeah. So, all right. So let's continue. We have determined that the OM market movements were triggered by reckless forced closures initiated by centralized exchanges on OM account holders. The timing and depth of the crash suggests that very sudden closure of account positions was initiated without sufficient warning or notice. That this happened during low liquidity hours on Sunday evening UTC points to a degree of negligence at best, or possibly intentional market positioning taken by centralized exchanges. So centralized exchange partners play an important role in providing liquidity to projects like ours. We work closely with them. However, they continue to exercise enormously high levels of discretion. When discretionary powers are exercised without due internal and external oversight, dislocations like what we recently happened can and will occur, hurting both projects and investors alike.
Yeah, so this is just like a damage control like message, right? It's like,
well, it's not only a damage control, but it's like, it's not us. The team didn't do this.
Right,
the bad guys that are centralized exchanges are the ones who are doing this. Yet, you have to employ these market makers in order to have a liquid environment.
Well, yeah, not only that. I mean, it seems, this token in particular like performed better than most tokens on the market.
Yeah,
during, like,
100%.
one of the most like egregious like down markets we've seen in recent history. So it kind of suggests like whoever these actors are that kind of pulled the plug, they were kind of like fluffing the stairway to heaven here a bit, right? So
Yeah.
if anything, it should set more alarm bells to people, like the industry ingrainment of like centralized exchanges and certain projects and like what it can and can't do as far as market manipulation goes and stuff like that, right?
Yeah.
Which is a bad, what does this mean? It's, it pings more like regulatory bells.
Yeah, it's weird because as a market maker, I mean, you're doing a good job here.
Right.
Right? This is like, if you did this, you did a good job, right?
Mm-hmm.
That's what you're paid to do.
Mm-hmm.
But then when they move their positions, all of a sudden number go down instantly.
Yeah.
And like now you're doing a bad job because contracts end or whatever it is that happened.
Mm-hmm.
Like how do you even mitigate this? If that's what their job is to do,
Mm-hmm.
right? So anyway, let's continue on here. So that's JP Mullen's like interpretation of this. You said that he did a Twitter space recently.
Yeah, more damage control, right? It's like you got to go out into the public gauntlet and kind of explain what's happening here, guys. And then part of that is, okay, you're saying like the team had no involvement in this, but here's like some on-chain data suggesting like, significant movement of tokens, which the team has some sort of, access and control over, right?
So it says, update, Mantra investors denied dumping OM before crash, despite on-chain data showing 227 million in OM moved to exchanges ahead of the collapse. So I don't know if this was like the market makers or the team moving the funds. Like, it's not exactly clear.
Yeah, there's still like details being discussed around, but nonetheless, so already the comparisons are coming in, right?
Yeah.
This is the Luna of this cycle, which
yeah, man, Luna collapsed post that cycle, right? Like it was scheduled, like after everyone had fun, right? And it's like, okay, now it's time to like end the fun, and like here's the collapse.
Yeah, it was part of like a perpetual, like definitely like the bleeding out of the market cycle, right? It started with, I think even before that, like some VC.
Yeah, I feel like
Three Arrows Capital or something collapsed.
No, I feel like the market's going down sort of triggered the collapse of Luna, not the other way around. Like Luna didn't start the collapse; it just ended up collapsing because numbers went down and things didn't make sense. Right. So yeah, here are the comparisons: OM and Luna of the cycle. 6 billion wiped within 30 minutes.
So this explains kind of like step by step what happened here in this thread.
Okay, so it all started when a wallet believed to be concentrated to the Mantra chain team suddenly deposited 3.9 million in OM tokens on the exchange OKX. The OM team reportedly controls about 90% of the token supply.
Yeah, I don't know how that's even possible. They can't. That's egregious.
How do you hold 90% and have an 8 billion market cap?
Yeah, exactly.
Over the past year, there were already trust issues in the community. Some of the concerns included the team was allegedly using market makers to keep the price up artificially.
Makes sense.
Makes sense. They quietly changed the tokenomics, and they kept delaying a promised community airdrop. So when the large token deposit hit OKX, people started to worry that a big sell-off was coming, and they were right. Selling pressure began shortly after. But the situation got a lot worse because something else, OTC, something else, over-the-counter deals. There were rumors that OM had made private deals with investors offering tokens at huge discounts, some at 50%. So when the price dropped by 50%, all those OTC buyers were suddenly at a loss, and the panic kicked in. Everyone wanted to exit before the price fell further. This led to a chain reaction. More people sold. Stop losses were triggered. Leveraged positions started getting liquidated. The market basically collapsed.
Jeez.
That wasn't just a price dip. It was a full-blown meltdown. Over $5.5 billion in value vanished in no time. A lot of people got burnt. So what's the takeaway? Be careful with tokens where a small group holds most of the supply. The team isn't transparent. Promises keep getting delayed. The price seems to be stable or too good to be true, which that's exactly what it looked like.
Yeah.
Always take the time to do your research before putting your money into anything. Don't listen to YouTubers. Don't listen to anybody on Twitter. Have conviction in your moves and make the plays that you feel comfortable going to sleep at night with.
Yeah, if you're looking at some kind of chart, like what happened preceding this sell-off, like it seems like unexplainable. Like, how could something just be performing this well in such an off market, right? It doesn't make any sense. Well, you're starting to see why. So if there are other, tokens out there with similar, setups,
Yeah.
I would definitely sound the alarm bells.
Yeah. And, we opened up this video talking about how real world assets was like a legitimate thing. It's like, I feel like it is legitimate only when you have buy-in from the government. It's like they recognize real world tokenized assets, right? Part of the reason why you own what you own is because you are legally protected, right? If you just own like a real world asset, but the government doesn't see it as actual ownership, it doesn't mean anything.
Mm-hmm.
So...
yeah, it's one of these sectors that's going to require like deep regulatory ingrainment into the on-chain economy, right? In order for like the proper facilitations to occur. So right now it's just like a killer narrative. It gets people excited. You can announce like certain strategic partnerships around this thing, like, maybe some like United Arab Emirates conglomerate for like some real estate portfolio in the trillions of dollars. And it's like, they don't really...
yeah.
They're outside of most jurisdictions, like whatever. Yeah, we'll claim that this stuff is coming onto your chain.
Yeah.
And then no actual like expectation of when like deliverance.
Yeah, for
and
sure.
like you're saying, even if so, it's just like some sort of on-chain receipt to really nothing, right? It's just...
yeah, that's right.
it's vapor, right?
Yeah.
At the end of the day.
Yeah, they could sell you a house in this tokenized
Yeah.
form. You get the token, but it's like you don't actually own anything.
Right. So what do we do, guys, as a market? As like everybody's like categorizing what are potential catalysts to bring us out of this mucky phase of the markets.
I got an idea, man.
Okay.
Let's listen to this guy, Clemente. The OM meltdown is a perfect bull case for meme coins.
All right.
95% of these altcoins are VC-backed ghost chains doing absolutely nothing. They sell you on a roadmap that's never coming and doesn't require a token. VCs dump on your head and will continue investing in these because they get an easy exit with TGEs. We all know meme coins are vaporware, but at least they're being honest about that versus putting lipstick on a pig and raising 100 million. Everyone talks shit about Pump Fund anything, but doesn't say anything about the inflated valuations of most of these chains. Pump Fund and Product Market Fit has shipped more than 99% of these chains combined.
Wow.
Yeah, when there's no execution risk, of course you delivered.
Yeah.
Right, when you launch a meme coin.
Yeah, so these are like two polar opposites of the market spectrum, right? Interpretations
Sure.
of like where we should be headed in like, the third and fourth quarter, I guess. Right? Cuz I mean, they're pulling, the invisible hand is, I think, in a pretty confused state, right? We've experienced the pumped up fun and what that does to the market. And then, we're already used to the VC realm of things, and events like this just build, the Murad thesis even more. It's like, we need to stray away from supporting fundamentals.
It's funny because what you're saying has some logic, right? So it's sort of like, I agree with what you're saying, but at the same time, memes did exactly that, except they did that in about a week for each meme for a whole year.
Basically, like whenever we predicted at some point, like these same market actors, they're going to formulate a new pathway to controlling, their exit ramps and how they're going to extract. The organic sentiment around this product called meme coins starts off with like a good, fair ethos, right? This is the time for the degens, right?
Sure.
This is our time, not to get a bunch of VCs rich.
Yeah, and it's such a good story too, because it's not about the VCs getting rich, it's about the community getting rich. However, we just saw with Pump.Fun and all these Solana tokens get manipulated by snipers and people on insider trading,
right,
wrecking people harder than what this did.
Harder and faster.
Yeah.
So you have the same thing, right? These explosive growth periods for memes, but it's much more accelerated, much shorter time frames. So essentially they're fast rugs versus slow rugs, Yeah,
that's right.
So at the end of the day, both polar ends of the product spectrum are delivering like the similar expectation.
Yeah. So we should just listen to CZ though, right?
Always.
It says, don't chase narratives, stick to fundamentals, projects, and users, revenues, and profits. Stay safe. So here's the arbiter of truth and all holiness of like value propositions in cryptocurrency.
Yeah, all things clean.
Yeah, all things clean with CZ.
Yeah.
But he says stick to fundamentals. with projects and users, which, you know, ultimately I was asking you before we got on, it's like, what are we doing here, dude? What are we doing as a collective industry in cryptocurrency? Well, ultimately it's like we're trying to, in today's market, just create a bunch of casinos because that has the product market fit at the moment. And it's like, if we do that, it's like, what are we ultimately like left with? It's like people just gambling and that's it. It's like, is that it? Are we done here? Like, just to create casinos? Like, okay, that could be one part. But the other part is like discovering problems and solutions. Like real world assets solve some problems, right? If you're dealing with like ownership, you have infinite proof of ownership with cryptocurrency. Right. And then another one is like, you know, we talk about the NAT token. Bitcoin has a sustainability problem in the long term. And it's like, therefore, we have the NAT token where it is sent to miners to sustain the ecosystem and increase security and all that stuff. So I feel like cryptocurrency needs to sway back to the more fundamentals to risk, execution risk like tokens, because otherwise we're just doing pumps and dumps. And like, if that's okay for the market, then that's okay. But in the long term, we got to be doing something, right?
Yeah. So what's missing then? You think like just like a unified?
Well, I think the market right now is just irrational. So I think it's more like, I don't know, just some sort of like reconciliation of just what we're trying to do here.
Right.
And I don't know if that's going to come because that takes some brain cells to rub together.
Yeah, well, it's challenging, right? Every single cycle comes with like new attempts of discovering, I guess, substance in these markets, right? Because it's clear as day, like what crypto and the rails of crypto and, you know, public ledgers and all this stuff. It's a really good value aggregator, I guess, where it's like you can create even though like people like to talk mess about like the UI UX dilemmas, that crypto is like forever encumbered with. Even with those like UI UX like friction points, it's still like capital can amass pretty quickly in these markets. It's been proven several times in the past, you know, but it's typically catalyzed by some sort of new narrative, some sort of new use case, right? So we're kind of like in this perpetual state as a market. It's like we got to discover these new use cases, these new interesting verticals, and apply these rails to that.
Yeah,
you know?
I feel like ultimately when you look at a project like this, like it does well and then it just like disappears. And you compare that to something like Bitcoin, like when Bitcoin goes down, that is not an indicator of a bad asset. That is just market sentiment. This is a measure of psychology, not a measure of value. And so when numbers go down for Bitcoin, that's like you have conviction enough to buy more. And that's what you want. This is the execution risk token, right? If the execution risk of Bitcoin is store of value for the entire planet, like you're betting on that when you're buying Bitcoin today, right? And so you want to make those same bets on other execution risk tokens like BitTensor, right? And so I feel like that is a more fundamentally sound bet that you could make, that you could go to sleep at night versus buying the next meme coin that could just rug you overnight in 10 minutes.
Yeah. But again, these are just different demographics for people, right? Some people are okay taking those risks.
Yeah. No, I agree.
Which is fine.
I agree. But the larger sentiment of cryptocurrency developers is like, okay, well, I guess everybody wants casinos. So I'm just going to make casinos.
Yep.
And like, what is the grand takeaway of that? It's like you have people just ultimately spending time creating casinos and amounting to nothing.
Yeah, but it's also a lot easier to build a casino launcher where it's like the products are memes, right? Because trying to figure out like an actual Bitcoin,
so true,
is like rare.
Yeah,
these are rare.
100%.
Oh, you're like you say Bitcoin, you say BitTensor.
Those are very hard to do.
These are like paradigm shifts in like understanding and interpreting like new value use cases for blockchains, right?
Yeah, that's true.
New interpretations of like what we could do with a chain, and those don't come on a daily basis.
So true,
right? So like in between those, macro shifts in the perceptive usability of blockchain and this industry of tech that we're working on, of course you're going to need to put out some smoke and mirrors out there for people to like stay engaged and entertained, who are not like, they're not trying to be a part of like a 10-year time horizon. They're trying to be like, what am I going to do in the next 10 minutes?
Sure.
Right? So
Yeah, I can see that.
So it's like these multi demographics kind of like, conflicting with one another creates a very like muddy picture overall, right? Because like nobody can agree on exactly how we should all be like, focusing our efforts moving forward.
Yeah.
But, I guess the optimistic takeaway here is, we're going to figure it out one way or another, right? We're going to, because we always do, right? In this space, BitConnect happened, FTX happened, Luna happened. Like these things keep happening, right? And they're going to probably keep happening even into the future, even if like stricter regulations come in.
I agree.
A Theranos is still going to slip through the cracks. An Enron is still going to slip through the cracks. It's going to happen, guys. So it's part of the market, and it's part of the game we're all a part of, right?
Yeah, I totally agree. So I don't have anything else to add to that.
Yeah, other than buy NAT. Buy NAT because literally unruggable.
Yeah.
If you're looking for something that like, we created this thing.
It solves a problem.
Yeah.
Right? There is no team supply. There's no VC supply. There's no concentration of supply anywhere besides basically an evenly distributed token on Bitcoin that supports Bitcoin's long-term future as a store of value and is being directed to the miners of Bitcoin. Like it exists and it's available and the market cap is basically nothing.
Yeah, but again, it's one of those 10-year time horizon tokens, right? But
if you're looking for a 10,000x, 100,000x, like just like Bitcoin, like it's there. They exist. You got to find them and do the research to understand why they're valuable.
Totally agree.
All right, that's it for us, guys. If you have any questions, you found another token that we should talk about, definitely let us know in the comment section below. I appreciate you for watching, and we'll catch you in the next video.
Peace.